Good afternoon, my name is Jordan Lambert, market analyst at Gelatomo Management. So we have a partial US government shutdown and gold has dropped over $40 to reach a low of $12.77. You may ask yourselves, why has gold dropped this low if we have had a US government shutdown? Well, the fact that gold hadn't really reacted despite the prospect of a US government shutdown with only 1 hour away from the deadline was an early sign that traders were more bearish on the market than bullish. Often, if the market fails to react to good news, it is an early sign that the market is bearish and an aggressive drop usually follows. The feeling in the financial markets at the moment is that the shutdown will only last a few days and not really impact GDP, and this way of thinking has caused stocks to rise and gold to fall. The other theory is that a government shutdown will give a further delay to the eventual withdrawal of stimulus. This would explain the stocks rise, but wouldn't really explain gold's demise. However, position traders should now be rubbing their hands because personally I feel like the gold has been a little bit overdone with the selling. And now the question will switch to how long will the government shutdown last, and also we have the looming debt ceiling battle as well. So as time passes with no resolution to these, uncertainty will increase again and gold should be in a good position. I would not be surprised if gold quickly recovers all of its losses that we've seen in the last 24 hours. Let's just take a look at the charts. Right, so here is the 4-hour chart I showed you yesterday. We had a triangle and it kept hitting the bottom side of the triangle and eventually it broke through, and this contributed to the sharp decline that we have seen all the way down to 12.77 before it found support. Right now it's into the 12.90s, but we can see on this 4-hour chart here the Bollinger Bands, the stochastics, even the RSI all signal oversold. We have a bullish hammer here and prices just return back within the Bollinger Band. So I think this is quite bullish in the short term. And again, with uncertainty, unless a resolution to the shutdown and the debt ceiling is quickly arrived at, then we could see uncertainty rise and this could help push gold higher. But technically, it looks like we could see a bit of a bounce. Also, bear in mind that we have support at 1270, 1273, and we have support again at 1270. Price has, however, decided to return before 1273, and it's the lowest it made was 1277. But generally speaking, there's support around the 1270s, and we've seen early signs of a rebound. So short term, yep, it looks like a good buy. But bear in mind, in the medium term, let me just delete. Right, in the medium term. In the medium term, we have a bearish crossover of the 20-day and the 50-day moving average. So the white line is the 20-day, the yellow line is the 50-day. We've seen a crossover. I mentioned this in my report a couple of days ago that this could lead to further declines, and lo and behold, it has. So such a crossover like this could lead to further declines. So I would not be surprised in the medium term to see further falls in gold, but definitely concentrate on the 4-hour chart here, the Bollinger Bands, the hammer, the oversold indicators. We could see a bit of a bounce, and resistance likely to be around 1300 or 1305. Thank you very much for listening to me, and I'll speak to you again tomorrow.